Hey guys, it's Harry here, back again with another video. So today I want to talk about the next global financial crisis, how I'm going to play it, how I'm going to predict it, and how I'm probably already going to be aware of it happening before it actually does happen. So as you can see here, I've got the US stock market on a yearly chart. As you can see here, it's just up and up and up. I mean, it just accelerated like crazy. But even if you go back in closer, you can see there it's been going up, up, up forever. But what people, I think, what you're seeing on the news is that candle should be happening. That candle, and that candle, right? So you should be getting these periods of time where it's crashing because that's the sentiment. Now that's definitely what I'm seeing. So how am I going to play this? What's going to be my playbook for it? So you want to really be not too panicking when big crashes happening. You should always be calm and controlled, and yeah, you shouldn't be too wary. So if we go to a weekly chart here, as you can see here, the stock market has just been in an insane move, and people have been calling for a crash in this area. But if you go back to the global financial crisis, so I think this is a really good frame to have why you shouldn't be just too worried about crashes. So the global financial crisis was officially announced in this sort of area. But as you can see, these EMAs have been bearish for since the beginning of the year, since late 2007, around that time. So really, I mean, look, the global financial crisis happened there. And really, you should have been reduced in size in that area because I guess it got below there, bearish retest of that 200-day EMA. That's the 200-day EMA and the 33-day EMA. So really, you should have, around it, yeah. There's no reason to be bullish, but people in markets, especially, they're always going to be leveraged long. They're not going to have a plan, and they're not going to know what type of investor you are. If you're just a buy, hold, die type of guy for the US stock market, none of this should be a concern, right? It should just be, yeah, it doesn't matter. It's going to keep going up like it did there. But if you want to be more tactical and avoid these large drawdowns, that's definitely, something you want to be considering. And as I've just mentioned, yeah, you would have been out there, and over here is where it was in the news, like, oh, this is a global financial crisis, which led to a bottom around 6 months later. Once again, price these narratives. So when you're investing based on charts, wherever price is, that creates the news headline. So these big candles created they pumped out to the news headlines, you could say. So yeah, I wanted to just jump on to say, like, look, if these crises happen, you should know about it a long time before. So I know a lot of people are talking about AI bubble right now, a tech bubble. Some of the valuations are insane and their revenues don't match up and all that. When they release, or even just look at SPX, look at the NASDAQ, you should already know whether a crisis is coming or not. And look, bang. Okay, I'm out. They've crossed bearish. You can do a simple investment strategy there. Or you could even do, okay, it's below the 200-day moving average. I'm out. And then you get back in here? I mean, that would have been, yeah, pretty nice entry. Got back in there, got a bit sharp, and then, yeah, you could have got a really nice trend there. So with this way of investing, you're always going to get false signals, right? That's the nature of it, but you avoid these huge drawdowns, which I think some people, when it comes to investing, when it comes to being tactical with your portfolio, they just want to avoid these huge drawdowns. So yeah, I just wanted to jump on to do a video about you can avoid these huge declines by just having a simple moving average in your disposal. So yeah, well, thank you very much for watching, guys. Please like, comment, subscribe, and yeah, I will see you in the next one.